some sort of multiple time frame analysis. All that is simply using multiple time frames to pull together the information to understand what's going on in the market and take your trades. Okay, now top-down analysis is a specific type of multiple time frame analysis where you start from the higher time frames and work your way slowly down, diving in deeper and deeper, getting a more intricate, detailed image of what's really going on. So this is going to be extremely important moving forward for you guys. It's going to be a big step. The reason we don't teach it until this point is because if you can't analyze one time frame by itself and understand what's going on, how are you ever going to be able to understand multiple time frames at the same time? Okay, so when we were in our journey and we were trying to learn multiple time frame analysis, that was a big hindrance for us as we were trying to learn it too early in the game before we were even able to fully understand one time frame, and now all that did was end up setting us back. So now we feel like you guys are ready to start approaching multiple time frames and understanding how to put it together to get a more clear image of the market. This is going to help your win to loss ratios. This is going to help your risk to reward. This is going to help your overall success as a trader. And just to be completely honest with you guys, once you are able to do multiple time frame analysis correctly, you're going to be unstoppable in the markets. Okay, it's going to completely change who you are as a trader and at what level you're trading the Forex market. Okay, so this is how professional Forex traders approach the market. And so we're just going to dive on in. Now, the first thing you're going to want to do, okay, so I'm going to walk you guys through a top-down multiple time frame analysis. Okay, so exactly how I will do it in the market. So we're going to start. I've got USD JPY pulled up here, and I'm going to start on the monthly time frame. That is the highest time frame you can pull up. Okay, so first thing I want to do is I want to kind of zoom out here and just see where I am in the overall scheme of the market. So I'm looking back. You guys can see it goes all the way back to 1994-ish, 93-ish. So we're going to ignore all that. That's not important for what's going on. Okay, on the monthly, you just kind of want to get a general idea of where you are in the overall market, and then be able to kind of zoom into that and find your trades. So I see where I'm at. I'm kind of in the middle here. I'm going to go ahead and zoom in. Okay, now for the monthly time frame, I want to make something really clear. You really just want the most relevant, important information, okay? Because this is the big overall zoom out. So for instance, I will give you guys an example. I am not worried about having this support level marked on the monthly time frame. Okay, why is that? Well, the reason why that is because I am literally years away from reaching this level. Okay, so it's not something that I need to have marked. So I'm going to delete this. Okay, so what might you be looking for? I will have this area here marked. Okay, this is a support level that I could see over the next couple months that I'm interested in. I will have this resistance level up here marked. That's another level that I could be interested in over the next few months. And then I'm going to mark this recent high as well. Let's see, get my tool here. Okay. Now, besides that, there's not too much more I'm going to mark. I will go ahead and mark, let's see, we'll go ahead and mark this trend line up here. Okay. And look back here. So let's see, we got a little bit more confluence for this resistance here. You guys can see all the way back. In terms of this support that we're looking at down here, you guys can see all the way back. Look at the confluence we have here. Okay, so make sure it looks nice. Get it as exact as you possibly can. I'm going to have mine right in this area here. Okay, so this is a railroad track, so I'm assuming that this entire thing pretty much is a rejection from this level in general. But when I see this tiny wick down, that's a very precise point. Okay, come over here, guys can see it wick through, body closed under, you get a wick right to the point, big candle breaks through, retest this area right here, retest, comes back down, big wick, 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 body, and then boom. So this is the exact level I want to have marked. Okay, it's important for these monthly levels that you have them fairly precise. Okay, so this is what I'm going to mark on the monthly. Now, get rid of this. Now, what this tells me is the overall picture of the market. So if you guys are looking at the market, okay, and I'm going to go ahead and mark, let's see, this candle right now, okay? So this monthly candle right here. If you guys had to guess, where would you say we're heading? For those of you who believe we are heading to this trend line here, you are most likely correct. Okay, so what we can most likely expect here on UJ on the monthly chart is that price will continue to head down a little bit more to this trend line, and then we will see things shoot up. So I will go ahead and mark one last thing. With that being said, here on this monthly is this counter trend line here. So for those of you who have seen my videos before, you know that I'm a big fan of channels, counter trend lines, and continuations through the channel. Okay, so we have this mark. Now this just gives me an idea of what price is going to be doing over the next couple months, where price is heading right now. I definitely wouldn't expect price to necessarily break up right now. I expect that we're heading slightly more down. Now I want you guys to understand this is the monthly chart, so slightly more down right now is about 170 pips. So now that I have this, I will go ahead and move down to the weekly time frame. All right, weekly time frame. So I don't need this anymore. I know where the market's at. Weekly time frame. Okay, now do you guys see how, look how much I have to zoom out just to get an understanding of what's even marked, okay? And this is why you don't want to mark too much on the monthly. Now, you can, what you're going to want to do is when you get to the weekly, you're going to want to kind of refine the things that you marked on the monthly. Just make them a little bit more precise. Okay, there we go. This level right here looks really good. You want to make sure your levels look extremely precise when you get down to the weekly. Yeah, look at this, very precise. So that was perfect. And then this level right here, just looking at this previous data here, let's see. I want like this, okay? So just make everything look really good. This I will adjust just a little bit, and then everything looks good. Okay, now I'm on the weekly time frame. So I want you guys to know that there are a lot of things that I see, for instance, on this chart right now that I'm not going to cover. So if you have experience trading, just know that the only reason I'm not going to touch on them is because it's content that is in the later months that we will be adding to. So I don't want to discuss anything for the newer guys who don't know about it. So I'm looking at the weekly chart, and I'm very interested in this zone right here. So why am I interested in this zone? Well, it's pretty simple. The weekly time frame is a significant time frame, right? So if I see that price came all the way down and then busted up, and then came all the way down, and then busted up, and then came all the way down, and it's having issues again, clearly this is an important zone, because you guys have to understand, this zone has held the market from, you guys can see down there at the bottom, April of 2017 to August of 2017. Okay, so it held it for a good 4 months. The market has just been held from this level. So this is clearly an important level. So on the monthly, when we expected price might shoot down to our trend line and bounce up, we now have kind of a refined image as we're looking at this. We don't necessarily expect that price would break this weekly level and then just break right back up. Okay, so we get kind of a refined image here. So we say, okay, we might see price rise a little bit and then come back and fall off of this counter trend line back to our support right here off of our major trend line, and that's where we will head up. Okay, so we get this refined image here a little bit, and the reason why we expect it might head up first is because A, we're sitting on this giant support, B, you guys can see there's a major resistance that keeps pushing it back down, right? C, we have a counter trend line here, which this would be a perfect confluence for a sell entry, which means it's a perfect confluence for where price may head to, okay? And then D, we know that we have some time to kill before price can reach this trend line coming up, and so this is the logical path that price would follow. So we get this path kind of down, so now as of the weekly time frame, we are looking at price to head up, okay, bullish. So we're going to go down to the daily time frame with this in mind. All right, now daily time frame. You guys can see our markings here, and you guys can have a little bit of a clarity on what's going on. So again, just using tools from months 1, 2, 3, we're going to go ahead and establish a channel here. This daily time frame. Okay. So you guys can see price has been flowing this channel down to support. So in order for our trade setup to validate, okay, so our trade plan where we expect price will rise up to this resistance before falling again, what do we need to see? We need to see a break and retest of this channel and a continuation to the upside. Okay, that's what we're really looking for here before we enter any long trades. You guys can enter before this. As you guys see, we have bullish price action at this support. You can use that for your entry, but understand that it is an aggressive entry. Okay, understand that so that if you do lose, you understand why you lost. It was an aggressive entry. But we have our channel here, so now we have a little bit more clarity. Again, even more clarity. A break and a retest of this zone right here will give us a buy entry to the upside. This buy entry right here on the daily time frame is a solid 450 pips. Okay, now we understand the plan going in even better. Let's go down to the 4-hour time frame. The 4-hour time frame. Okay, here we are, 4-hour time frame. So on the 4-hour time frame, this is where we really tend to try and look for our swing trade entries. The 4-hour time frame is just a nice working time frame for us. So we really enjoy this time frame. So I'm going to go ahead and start pointing some things out so you guys can see. Think back on month 3 price action. What are these candlesticks telling you here? Think back again. We have giant bullish engulfing candlestick at support. Think back again. Bullish tweezers at support. Okay. Think back to these things. Understand what price is telling you as a whole. Now, you guys have recently learned structure. So we're going to be getting into a little bit of structure here. I'm going to show you kind of what it means. So we were, go ahead and change this to black. We were bearish coming down structurally. Swing here. Swing here. Okay. Now, what has happened? Price has broken through our structure. We have switched structure now to bullish. Okay. And then we see a higher low made right here. This is extremely important. This higher low right here is everything. This tells us that we are in bullish structure and we can expect a higher high to be made, and that just gives us more confidence that we can soon see a breakout of this channel and then a retest and then a continuation to the upside. Now, just as kind of a getting a feel for how this works, right? What we start to look for. Can you guys see this resistance right here where prices form this double top? Okay, you guys see this resistance? It was previously support, where it was in resistance, then a support, right? So it's a very strong level right here that price has been playing with for quite some time. So we know what our general plan is, right? So let's refine it even more. We could see, if price breaks through this, we will likely see price break through this channel. And when price comes to retest, what should it retest? Our channel and our support and resistance level at the same time. That would be an ideal entry to the upside. Okay, now the cool part about doing multiple time frame analysis, you can zoom out here and you know that your overall target, based on everything we've talked about, is this area right here. Okay, about 416 pips or so from there. Stop loss would have to be down here. That's the level that would invalidate it. 150 or so pips. Now, you guys can keep a more aggressive stop loss on here, which it's going to kind of depend on market conditions, to be honest. As long as it's a clear hold here and we get bullish price action, you guys can keep your stop loss very minimal, 30 or so pips, in order to make 416. So I don't even have to tell you, but the risk to reward being 13 is insane. I mean, you could lose 12 out of 13 trades and you would still be profitable. So that's kind of the beauty of swing trading. Now, you don't necessarily, if you had this entry here, you don't necessarily have to take it all the way to where you believe it will go, right? So at the end of the day, you have to understand that you need to have goals for what you're looking to get out of the market for each day or each week or each month, or however you choose to set your goals, right? Because as long as you know that you can consistently catch pips, you can trade any lot you want, and once you can trade any lot size you want, you're good to go. Nothing else really matters. Okay, so you don't necessarily have to squeeze every single pip out of the market. So let's say that price gets to this zone right here, this major support and resistance zone. See, it was support, turn to resistance, and it just really starts struggling, gives you a bunch of reversal signals. Guys, take your profits. Okay, this is still a 4-to-1 risk to reward on this trade. It's 123 pips. You can take your profits. So that's kind of the beauty. And if you guys really want to, if you get a, let me see here, if you get a break and a retest here, what can you guys do? You can re-enter for another position, understanding that your overall target for this move is up here at this level, right? So, but anyways, that's the beauty of understanding top-down analysis, is you can really get a grip on the market and really start to solidify these trades, right? You have so much more confidence that price will reach this level if you expect that price is going to be reaching this level up here anyways. Okay, so it really gives you a better grip on the market. Now, in terms of swing trading, we really like entries here on the 4-hour. We do come down to lower time frames, the 1 hour, and sometimes the 15-minute, because you get nice scalps on the 15-minute sometimes. Go ahead and get rid of this here. And sometimes you just need a little bit more clarity. So I'm down here on the 1 hour. You guys can see we had this break and retest continuation here. We had this right here broke. Could have had a better retest, so we might see another fall again, but I doubt it, because you guys can see that we have this ascending trend line here. Now, until this level and this channel breaks, this is still a counter trend line. The trend line is just counter trend line. So if this breaks, retest, it will fall and retest this trend line guaranteed, and it could even fall a little more. So we just watch price action here and we react to what the market tells us. Again, we say this all the time, guys. It's a newbie mistake to predict the market, right? Because if I know that price should break and retest and continue, why don't I just buy right now? Well, that's not how Forex works. Forex works by you create a trading plan, and when the market does what you expect it should do, you will enter based on your preset plan, and that's how you eliminate losses, and that's how you start to trade at a professional level. So we're watching this, right? We just get more clarity. These things just start to build up and build up. You guys can see we are in bullish structure on the 1 hour as well. And these confluences just start to build up. So this is a great example of how you use top-down analysis to really get a feel for the market. Like right now in this video, you guys should have such a good grasp on what's going on UJ, right? A greater grasp than you've ever had on a pair. I mean, you should feel really comfortable understanding what's going on. Versus if you were just sitting here on the 1 hour, and watch, I can show you. I will clear everything right here. Remove everything. Okay, so you're just sitting here on the 1 hour. What are you thinking on the 1 hour? You're thinking this. You're thinking, oh, okay, I've got this big resistance. Okay, I've got a trend line coming up. I've got another major level down here that I'm looking at. And you guys are probably preparing for a sell. You guys are probably preparing for, let's see here. You guys are probably preparing for, boom, retest of both of these levels, and then continuation back down for a nice trade. So what's going to happen is you guys will be really shocked if price were to break through here give you a retest this way, and continue on. Now, if you've watched everything that we've taught you and you've really paid attention, you understand that you should have, this should be your trading plan right now anyways. You should be prepared for both situations because, again, we always talk about have a trading plan for all scenarios because your job is not to predict the market. But you would be surprised to see this thing break, retest, and go on. But having that understanding of what's going on in the higher time frames, it's not going to shock you when this level breaks and you see price go forward. Okay, so that's extremely important, and you have that grip. So if you guys are in a sell trade for whatever reason, let's say you're in the sell trade because it broke and retested, you are not surprised when price only comes halfway down and then all of a sudden you see a reversal and price starts to just shoot up and bust through things, because you have that grip on the market, you know what you're looking for, and you're able to trade intraday based on the overall view of the market. And that's the power of multiple time frame analysis, especially top-down analysis. So I hope this gives you guys a really solid foundational understanding of kind of what we're looking at for top-down analysis, what it does for you, how it benefits your trading.